This is our Forex blog for July 16th, 2014, and these are currency indexes, which in my opinion is one of the easiest ways of trading. It lets you see as a chart what each individual currency is doing. So, for instance, the dollar, you can see is clearly trending up. It's above its hourly moving average. It does find some resistance at our upper containment bands, which most of the time that's what happens. And you want to buy the dollar against whatever currency is weakest. The euro starts off as strong and then kind of breaks down here in this nice little multi-hour rectangle wedge pattern and trends down the rest of the day. So we got a strong dollar, weak euro, and basically you want to look to sell the euro dollar. So here's our euro dollar chart, and here's our Forex signals, which most people like to see in our Forex blog each day, especially later in the day when the euro was trending down. You have these, nice size wins, pretty much break even here, big win, and even our, I'm sorry, here's actually today, that was yesterday. Here's today, this nice little 20-25 pip win here. The key to trading is small losses, bigger wins, and as you can see here, when the euro, it's trending up, it's the upper containment bands, not able to go higher for many hours, breaks down right here at 240. You can trade that against whatever currency is strong. For instance, the pound's strong, so you can sell the euro pound around 240, and you're going to have a very high odds of this thing going down. Here's 240 right around here, breaks down underneath this low, put your stop above the high, and you can see it went about 2 times more than the risk. I'll just put this on here so you can visualize it. And anytime you have a very high probability method of predicting future price direction, the yen is also strong. So again, weak euro, strong yen. You want to look to sell it. And basically there's 2 methods of looking for entries. One is a multi-hour, I would say hour and a half to 3 hour rectangle pattern breakout. And the second entry method is kind of a pullback trade where it goes up for, I would say, 45 minutes to an hour and a half. Can't go any higher. It always helps to draw your fibs on here, and usually the 38 to 62% retracement is pretty high probability. In this case, you can see it didn't quite make it to that fib area. Traders might have been using the high of today instead. That's where it went to. Any kind of support resistance area is pretty high probability, where you can risk super tiny amount, and most of the time you're going to make many times multiple of what your risk is. That's the key to trading. Since we know the euro is weak today, let's look at some of the other currencies. The Australian was weak earlier, came back above its hourly moving average, and kind of went sideways and broke out here around 830. So the euro Australian, very high probability currency to be going down around 830, and that's exactly what happens here. As you can see, this has been trending down, makes a new low. Here's the high of that last low, makes a new low again. It's going sideways for 2 hours, like I said. 830 comes, and this is a pretty high probability trade. You can kind of anticipate that breakout and risk a tiny amount, and even if you got out an hour and a half and not catch the rest of the move, which is only an extra 10-15 pips, your win versus risk is 2.5 times. And again, that's the key to trading. So I'll finish today's blog with going over some of our other currency signals. In the past, I would say 80% or 90% of my day was focusing on the euro dollar and sometimes the pound dollar. Now I'm going through 12 major currencies each day and trying to make sure that the patterns that show up are very high probability. So you have a tiny little loss here. You got most, or at least some of that win back here. You got all of your loss back for the day here. You're up a little bit on the day. Got this huge win here. You go short here. And this is another win. So this is pretty much your profit of the day, because these pretty much equal themselves out. Here you have a very tiny loss, which you get back on the next trade here. And then you go short on this trade, and it flipped and went long here, so we're pretty much these are two tiny losses that got pretty much eaten up by this win, and you're left with this as your profit. You add those two together, you pretty much caught 10, 20, 30, 40, 50 or so pips in the EuroCAD. Here is the dollar Swiss, which only had one trade today, but you know, and you can see the previous day, pretty much small win here, win, pretty much a very tiny 2 or 3 pip loss, and 20 pip win. There's 400 and I think 60 or 61 patterns that are in this, and so I realize that it's very hard to create an algorithm that finds every single double top, double bottom with high probability, so I actually code up each trade pattern individually. And so because it's one individual trade pattern, I can be super strict in my rules. Some of my patterns have 20 to 35 different rules for just one pattern. And again, there's 460, 463, somewhere in that range as of this moment today. Once a week to every 2 weeks, we release a new version of our software with the latest signals. And basically, I spend the majority of my time now adding more rules to our old patterns, tightening them up, making them stricter, making them higher probability. My goal now is to have every pattern be at least 65% winning. So if I see a pattern that shows up that wasn't quite like what the original one looks like, because I took a picture of each of the 460 plus patterns with notes on each of the 460 plus patterns, and every day I look at them, and the ones that show up that look kind of odd, I look at the original, and you know, again, if it is not exact, or if it doesn't meet all the rules that should have been in the original pattern, you know, when I first put it in, I add those rules now. And so you're not going to get that same loss in the future based on what happened today that shouldn't have. So I think you'll be very happy with our Forex signals. Most people really just want to sit down and trade hour, 2 hours, 1 to 3 times, maybe 5 times a week. Try to make 10 to 30 pips every day. Most people do not want to spend years and years and years learning very advanced trading methods. They just want to sit down and trade and try to catch more pips on winning days than they lose on losing days, and make money most weeks. And so that's what that in my original focus 9 years ago of creating automated trading systems so I can spend more time with enjoying the things in life that I want. That's why our focus now is on signals. It doesn't make any sense to do classes every day, teach people relatively simple systems that they can understand when, you know, the more sophisticated methods, which are much harder to learn, are the ones that tend to work. And the human eye, including mine, even though I have 172 IQ, can't watch more than 4 to 5 things at once. Now you can watch maybe 5 to 10 or 12 currencies, but if you have 15 to 25 indicators on each chart, you're not going to be able to process all that information. But a computer can do that, and I have over 75 different indicators that are in the trading system. Each different trade type uses, you know, 3 to, as I said, 35 different rules, including the swing highs and lows. If the market's making higher highs and higher lows, if the market's last move up was over 50 pips, for instance, I'm more apt to buy the 38% pullback. If the previous swing high went over the previous day's high, we're much more apt, because that's a sign of strength. I look for signs of strength or weakness, and then I look for a reversal or a little sideways rectangle pattern, and then when it breaks out after low volatility, previous trend was up, it's likely to go up again, just like a human trader would trade, but without having to spend years and years and years of your time learning how to trade.